Hello, welcome to Taylor Morrison's Finance Focused Home Buying Webinar. We're excited that you're joining us today to learn a little bit about Taylor Morrison, what's happening in today's market, and what steps you can take today in your new home buying journey. We have received over 1,000 registrants and just over 200 questions in advance of the webinar. So at the end, we have definitely grouped the questions and we'll be going through and answering them. We do have a live chat going where we have team members from Taylor Morrison Home Funding as well as Taylor Morrison to answer the questions along the way. I would recommend waiting towards we get near the end of the presentation to post some of the questions, as a lot of frequently asked questions are typically answered throughout as they come up as some common topics that we've prepared for. Go ahead for the next slide, please. Thank you. Okay, so let me start off by introducing myself. My name is Andrea Murphy. I am the National Senior Director of Sales Implementation. I have been in home building for over 21 years. I lead a lot of our national projects, partnering with all of our divisions across all of our markets, our IT team, Taylor Morrison Home Funding, our design studios in each market, and really help to align our resources, our productivity, and truly give you the best customer experience that we can. I'm also joined today by Brendan O'Neill and Chrissy Farrell, who will be introducing themselves a little later in the presentation. Okay, so I'm going to start by sharing just a quick background on our organization. Taylor Morrison has over 100 years of history and has grown to be one of the largest home builders in the nation, building in 20 markets coast to coast. We are very proud to be recognized as America's most trusted home builder for the last 9 consecutive years. We serve every buyer demographic from first-time home buyers, move-up, active adults, and we've been recognized by Fortune magazine as one of the world's most admired companies and are truly honored to be a member of Bloomberg's Gender Equality Index, as we are led by the only female CEO of the top US home builders. At Taylor Morrison, we're more than just a builder. Our spirit and values of being sustainable, innovative, and focused on our local communities rings true through various partnerships that we have locally and nationally. A few of those that we partnered with are, not sure how much you're into home organization, Instagram for sure, Joanna and Clea. They are Emmy-nominated Netflix show, Get Organized, and really provide organization tips for our home buyers. Every Taylor Morrison homebuyer receives an exclusive printed booklet with tips for how you can organize your room, really stay cleanly through your home buying journey. And this is given to every Taylor Morrison customer as a closing gift. We have served as the home builder for the premiere of the Extreme Makeover in the fall reboot this past year. Home Edition is really where we take a step back and build a home for deserving families across the country. And we just recently did this in Texas. We also partner with the Waste Management Phoenix Open. We were the presenting sponsor of the tournament right in our headquarters in Scottsdale, Arizona. The main focus of this event is really to raise money for local charities. And this year, Taylor Morrison raised thousands of dollars to help with Banner Cancer Center to build homes for patients who travel from all over the world for care. In fact, with Banner Health, we're excited to be building a community of furnished homes that provide housing assistance for patients and their families, like I said, across the country. Lastly, we partner with the Wildlife Federation This restores and conserves wildlife habitats in our communities. We have butterfly gardens if you visit any of our models, really spaces that are designated to enhance our wildlife across the country. Go ahead to the next slide. Thank you. Okay, so our journey deals with a lot of different departments and team members along the way. First and foremost is our online sales managers. Those are typically your first contact in your new home search. They are there to be essentially your virtual guide as you begin to look at what communities you're interested in, what floor plans, maybe some unique information about the community that you'd like answered. They're there for you to assist along the way, setting appointments, giving you the information you need, and maybe provide some recommendations on what communities might best suit your needs. You're next given over to our community sales managers, which are on site in our model homes. Sometimes we do pre-sales and you can meet them virtually, but they are your local community experts. They know every feature as it relates to the community, the floor plans, any unique situations with the surrounding areas. They're there to help you guide in the right direction right before you get started with your purchase and sale. After you have purchased your new Taylor Morrison home, we deliver you an amazing experience, whether it's through curated packages that you take advantage of in each of our communities, or potentially meet with one of our designers at our design studios. Our construction superintendents are there to guide you through the construction, what goes on behind the walls as we prepare for any nuances that we deal with the municipalities. They are your experts when it comes to everything building, codes, any questions along the way that you have there. Our loan consultants really start at any point of this process, right? You decide that you're interested in looking at one of our homes or our communities. Our loan consultants are there from beginning to end. So through your pre-qualification or potentially just your interest in one of our communities or homes, and then they're there for you with your financing journey along the way, and potentially a stop with one of our Aero consultants, which Christy and Brendan will talk about later in the presentation. Okay, lastly, launching later this month, we have a new feature that will be available on our Taylor Morrison portal. You'll see it in social media, email campaigns, but we're really excited to provide you this education throughout your home buying journey. We call it Real Talk by Taylor Morrison. And it really is a deeper dive into each step along the way. We'll give you tips and tricks about your home. That's where the partnership with the home edit comes in. It could be just examples of how to care for your home after you move in. Maybe some interesting tidbits about how we build from a construction standpoint, and the Taylor Morrison pieces that we use along the way in your home building journey. All of that is delivered to you and will be coming soon in the next month. With that, I'm going to go ahead and turn it over to Brendan with Taylor Morrison Home Funding to introduce himself and to chat a little bit about rates and home affordability.
Great. Thank you, Andrea. Hi, everybody. Thanks for joining us this afternoon. My name is Brendan O'Neill, and I'm coming to you from Scottsdale, Arizona. I have been in the mortgage industry for over 30 years. And in the home building side of the mortgage industry for the last 25 years, and very happily joined Taylor Morrison over 5 years ago. As Andrea said, I'm here to talk to you today about kind of interest rates and home affordability. And then, Christy and I will be talking a lot about the home financing journey with you as well. So let's get started. All right, so over the next few slides, you're going to see information about interest rates and different affordability charts and so forth. And a lot of that comes from Mortgage News Daily or the St. Louis Federal Reserve Bank. But for roughly 2 years now, interest rates have been on the rise and in the news. And most recent news links that are shared here, maybe from US Bank or Bankrate, US News, Housing Wire, Mortgage News Daily, you can find regular updates on what's going on in the news for interest rates. We find that a great source on a day-to-day basis is the Mortgage News Daily website. As the slide says, rates rise like a rocket and fall like a feather. And you can see where rates are now at about 7% since the beginning of March. However, luckily, there's been some relief over the last 10 days or so, but it's kind of all relative. And we're going to look at the next slide to provide a historical view and some insights on affordability. So if we can move next slide, please. Great, thank you. As this slide shows, there's about a 50-year historical chart here. And what is normal? I began selling mortgages in my career, rates were about 10 to 12%. Over the past 50 years, the Freddie Mac average on a 30-year fixed rate is 7.74%. So does that make that rate normal? I think education is key. Rates rise and fall due to a variety of economic factors. In the 80s, we can see rates were between 10 and 18%. In the 90s, they were between 7 and 9%. Then beginning in 2000, for about 20 years, we see a prolonged reduction of rates below 5%, with the bottom in December 2020 of being about 2.75%. Then begins the dramatic rise to today's market. So what's normal? Is it 10%? Is it 3%? Is it the 7.74 Freddie Mac average? Or is it what the consumer thinks is normal? Again, education is key. Using resources like the Mortgage News Daily keeps you informed on current trends. Okay, so we know rates rise and fall. What about housing affordability with rising rates? I'm glad you asked. So we're going to take a look here at the last 12 years. And from there, you're going to get to see a lot of interesting stats here. I think it's really important to remember that there's still an underlying supply and demand dynamic involved here. By some estimates, housing is still short nationwide by some 3 million homes. Over the past 10 to 12 years, the median sales price is increasing faster than the median income. Everyone who purchased a home from 2012 to 2022 is likely below 5%, maybe even below 4% or even 3%. In 2022, rates basically doubled in 6 months, and the impact on affordability is severe because everything on this slide, you have rising rates, your median sales price is rising faster than median income, and then you have 10 to 12 years of rates below 5%. This means retail inventory is down. The homeowner looking to move up is now having second thoughts about selling their home at 3% and securing a new home at 7 or 8%. But let's take a look at the impact in terms of dollars and cents on this. As you can see here, there's 3 basic charts and columns. And for simplicity, we're assuming the conventional and FHA rates are the same in this example. Historically, they'd be close. All right, so in 2012 to 2020, rates were pretty close to the same. So in the upper half of this, we look at conventional financing with interest rates around 3.5% in 2012 and 3.25% in 2020. From a conventional perspective, that would mean that roughly 20% of your income is now your mortgage payment. For FHA financing, for those same 2012 and 2020 timelines, that goes to 24% of your income being applied towards your mortgage company. When you fast forward to today in the rising rate markets, you now start to see that in conventional financing, that goes to almost 30%, 34% of your income, and 43% for FHA financing. So it's not all doom and gloom, and we're just talking about what's in the market today and what is normal. The good news is that we're going to show you today that how Taylor Morrison is helping you, the consumer. These 2 charts range over the last 13 months where many Taylor Morrison home buyers are securing below market interest rates, both conventional and FHA financing programs. These home buyers were generally 1% below the national average, and in some cases almost 2% below the national averages. Program offerings change regularly, so visit taylormorrison.com or your local Taylor Morrison community for details on current programs. Taylor Morrison recognizes the impact on affordability and regularly has been offering programs below market averages for the last 13 months. Christy's going to jump in here and show you some of the specifics now. So thanks, Christy.
Thank you, Brendan. Hello, everyone. I'm Christy Farrow. I'm with Taylor Morrison Home Funding. I am our Senior VP of Financial Services. I've actually been with Taylor Morrison for just crossed 22 years. I work directly with Brendan, oversee all of our origination team members throughout the nation, work directly with our Taylor Morrison corporate marketing, local marketing, and really wanted to take some time today to just kind of share with you all what Taylor Morrison is able to offer to help you with that home affordability. Brendan let you know that we've been reducing customer rates all year. We've been doing it for almost a couple of years now. So I just want to kind of go through here in this next slide. How are we able to do it? So there's two options on how Taylor Morrison is able to reduce your rate. And what they're doing is reducing your interest rate before you even walk in to purchase a home. Over here on the left, where it shows that we're reducing fixed rate for homes closing within 60 days, essentially Taylor Morrison is able to buy a pool of loan funds not attached to a home just yet by using rate discount points, and they pay in advance for a specific interest rate on owner-occupied homes only. If you're looking for a home that's not owner-occupied or a home that's closing outside of 60 days, we have a unique program called Buy, Build, Secure. This is a Taylor Morrison program that also is buying down interest rates through discount fees for a future rate of your choice. And this is available for owner-occupied, second home, and investment properties. And again, what's so special about this is that buying down the interest rate in advance of a borrower purchasing a home is not considered part of the maximum seller contributions that are usually required, or are required, I should say, by lending guidelines. So in addition to being able to offer reduced interest rates, all of our markets are offering some sort of incentive towards settlement charges, additional rate buy downs, and we'll talk about that in just a couple of minutes. Next slide, please. Thank you. So let's kind of compare that payment and buying power for both conventional and FHA options. And before I do that, I just want to let everyone know that when we talk about the FHA 30-year fixed rates that you're seeing here offered today, those are also available for our veterans seeking VA financing or active military. So the FHA and VA rates do mirror each other identically. So over here on the left, you're first going to see the 5.49, which is our current below market rate. And we're going to compare that today to the national average rate. Brendan mentioned Mortgage News Daily. It's like my go-to for all things on average rates. It's just a very good look. So we're just going to compare to the national average rate today. And what you're seeing here is a savings of nearly $400 a month from going from 6.92, which was yesterday's national average, compared to the offering today of 5.49. This is also showing the buying power. And when we talk about buying power, this means that you would have to purchase a home in this example for $444,000 using a current market rate of nearly 7%, as opposed to being able to purchase a home for $500,000 with the reduced rate. And that would, help you achieve that same payment that you would have on that lower priced home at a higher rate. In the FHA example, I'm showing the 4.875, which is offered in some of our markets, and 5.5 is offered in other markets. So these rate offerings are going to vary by market, but the monthly savings shown here is almost $400 a month, and then shows you that buying power with where you would have to purchase a home for $339,000 at the higher rate, as opposed to $400,000 with a reduced rate. So when we talk about home affordability, absolutely, these interest rates that Taylor Morrison is providing are truly helping customers purchase homes today at yesterday's interest rates. And then let's touch on Buy, Build, Secure for just a moment. You can go ahead, Katarina, and click the next box. Thank you. So these buy, build, secure is really kind of, I think, our secret sauce. It's filling in the gaps for those homes that are not closing quickly, to be built homes. And they're providing still a below market rate at the time that you choose to lock your rate. So you're not locking your rate, or you don't need to lock your rate as soon as you purchase, but we would work hand in hand with the home builder to coordinate home completion. And then just like if you did not have a promotional rate, you're going to lock your interest rate when you feel comfortable and timing that with home completion. So when we compare buy, build, secure, whether choosing a shorter or extended rate lock, you can lock up to 120 days without an upfront lock fee. We also offer buy, build, secure under our extended rate lock program, where you have the option to lock your interest rate for up to 1 year. So if you're nervous about interest rates going up during construction, there is that ability to essentially pay a lock fee, which protects the hedge on the rate. Think of it like an insurance policy. You know, you protect your home from hurricanes and fires, and you might want to protect your mortgage against a very high interest rate that could potentially throw you out of qualification. So you have that ability to do that. It's not required, it's your choice. And we can float down that interest rate closer to current market within 30 days of closing if you choose that third option. But all of that is available to you through Buy, Build, Secure. And then let's talk about the incentives outside of the reduced interest rates. So if you're have the opportunity to take advantage of one of the reduced interest rates, you also would have assistance to help with closing costs and other finance expenses. So when you look back at where interest rates spiked mid-year 2022 for the first time, homebuyers really needed an avenue to afford their new home. And I just want to put it in perspective that Taylor Morrison has increased their national average finance incentives by 400% since July 2022. And this does not even include the promotional interest rate offerings. This is truly what we've done to help with home affordability and allow buyers the comfort level to make that buying decision from renting to owning or making that move to a new home. The amount of those contract finance incentives are going to vary by market. And one of the options that is many times overlooked is that expensive mortgage insurance. So when you're obtaining conventional financing, there will be monthly mortgage insurance if you're placing less than 20% down, but you also have the option to pay the premium up front, or you can split that premium between monthly and a portion up front. You can utilize Taylor Morrison's incentives to pay that premium without having to add that to your monthly payment. It does also help with qualifying if you're, budget tight. And you could also think about it as, maybe you're trying to save 20%, or you're going to deplete your savings to put 20% down. So you have that ability to actually keep those additional assets on hand for a rainy day, not have that additional monthly expense of mortgage insurance, and allow Taylor Morrison's incentives to cover that cost for you. Maybe put 10% down or 15% down. But to be honest, conventional financing can offer loan programs with as low as 3 to 5% down. We did talk about permanent buy downs already, because that's essentially what we're doing through the Buy, Build, Secure and the reduced rate offerings for our quick move-in homes. But there is a program that maybe you have or haven't heard of called a temporary buy down, a lot of times thought of to be an adjustable rate mortgage, which it is not. But there is always that thought that, hey, I might refinance my home in the next 3 to 5 years. I'm not really interested in buying down a rate for 30 years. What can I do to help ease into home ownership? And you can really save interest in the early term of your loan by utilizing a temporary buy down. And these have become a great option for those home buyers in the last couple of years that just want to pay off a particular debt or slowly ease into that monthly payment. So we'll talk a little bit about what a temporary buy down is. So first and foremost, I mentioned it is not an adjustable rate. That is a myth, and it absolutely is a fixed rate mortgage that you have for 15 or 30 years, where you have Taylor Morrison subsidizing that monthly payment for you during the buy down period. The buy down period can be anywhere from 1 to 3 years. And it is a very safe loan because you are qualifying at the actual fixed rate, not at the reduced interest rate. And again, as I mentioned, you're easing into home ownership for the first 1 to 3 years. So I'll show you just kind of a visual of that, and we'll utilize this 5.49 reduced interest rate that we're offering now. And if you look at the chart, you can see those savings. So we call it, in this example, a 3-2-1 buy down. So for the first year, you're getting a payment based on 3% below your note rate. The second year, you're 2% below your note rate. And the third year, you are 1% below your note rate. And this chart over here does explain kind of what is that P&I, principal and interest payment, look like. What is that monthly savings? And the calculation of cost is simple math. It is, the monthly savings times 12 months for that year one. And then you have the monthly savings, 12 months, year two, etc., totaling a 3-year savings in this example of almost $17,000. So essentially, Taylor Morrison will take that $17,000. You will make the reduced payment every month, and a portion of that $17,000 gets married up for that full 5.49% payment. So you're still technically giving the loan servicer 5.49 in payment, but you personally are only paying a portion of that. And then I do want to mention that temporary buy downs are available for conventional FHA and VA financing, and they're available for owner-occupied purchases only. Thank you, Katarina. Yeah, we'll just go ahead and throw these up there. So this is the 4 different types of temporary buy down options. We already talked about the 3-2-1. If you're not interested in using your full incentive solely for a buy down, and you may want to use a portion of your finance incentive for something else that we showed earlier, whether it be mortgage insurance, standard closing cost, you want to permanently buy down the rate even further, we have a 2-1, a 1-1, and a 1-0 option available. And this slide is just essentially showing that savings that you would have annually and then over the first 1 to 3 years of owning your home. Next slide, thank you. And then I just kind of wanted to point out, a lot of times when we're looking to buy anything, whether it be a car or a home, we're always looking for the lowest price. But I will say it is fact that the number one reason for making a buying decision is monthly payment. Number 2 tends to be cash out of pocket. So I just kind of want to show here where a price reduction in lieu of assistance with financing costs doesn't necessarily mean a lower payment. In this example that I'm showing today, we're going to use this $500,000 sale price. If you were to purchase the home for $520,000, allowing yourself $20,000 to use for finance incentives, you would have to do a little bit more in down payment. You'd be borrowing a little bit more money. You would be paying more for your home, but you would have the ability with that $20,000 to buy down the interest rate, drive a lower payment, use the remainder of that $20,000 towards your closing costs to help offset the additional down payment. And it's higher price, higher loan, lower payment, same cash out of pocket. Katarina, you can click one more time for me. Thank you. And a couple things, just recognizing that number one, we want to preserve your community value. If we slash prices and, appraisals for properties are based on the last 2 to 6 months of recent closed sales, in order to preserve your community value, you do want to be careful that you're not moving into a neighborhood where prices are being slashed, because once you move in, if home prices continue to reduce at speed, then we just have that domino effect of community values depreciating. And what we want to see is community values appreciating. And the way that you're able to stabilize payments and affordability is truly through financing. Next slide, please. And then lastly, we had a lot of questions about the incentives being offered right now by Taylor Morrison. Nationwide, we have these rates available. Nationwide, we have finance incentives to help with closing costs. They are going to be very community and market specific. The QR code that's on here, along with the link to the taylormorrison.com page, you just link into there, scroll down to the market you're looking for, and you will be taken directly to a market specific landing page that will give you more ideas of what is being offered, as well as tying in with our online sales managers and community sales managers that can get more community and market specific for you. So with that, I believe, yep, I'm going to turn you back over to Brendan, and he will talk a little bit about our Arrow program and a couple of other fun things. Thanks, Brendan.
Yeah, great. Thanks, Christy. So let's talk a little bit about the home financing journey and a couple of other great programs that we have. You know, here you're getting a glimpse of that journey, and it starts with the pre-apply online, and we'll talk some more about that in just a moment. But as we go through a new home purchase process, it's always really important to remember that whether you're purchasing a quick close home or something that you're building from the ground up, like a to-be built, that you avoid any major changes to your credit profile. You know, this includes basically, you know, doing anything major with your credit, purchasing cars or what have you there, as well as changing, you know, jobs, things like that. Obviously, life changes and those things are unavoidable sometimes. So if it does happen, please make sure you reach out to your loan consultant immediately to kind of talk through those options. You know, from there, don't be alarmed. If you're on that to be built process, we're going to be obtaining financial documents throughout from you, your pay stubs, your bank statements, things like that. They generally expire after 120 days. So you got to figure we're going to be asking for them roughly around that time frame. Around 60 days prior to closing, though, we're going to refresh your application one more time by getting all of those documentations, including your final credit report, things like that. That's prepared for the final clear to close for you. You know, most customers are looking to lock in their interest rate around 60 days prior to closing, but we have programs that go up to 360 days. So, you know, you can talk to your loan consultant about what fits your needs the best for sure. So really from there, it's about, you know, how do we get started? And can we click to the next? There you go. Thank you. So how do we get started? It's really simple. You know, visit taylormorrison.com/home financing or utilize the QR code on this slide, where here you can click on the pre-apply now, where you're going to enter our online secure Dorothy platform to begin that journey. A loan consultant will contact you within hours or the next business day if you happen to apply in the evening. This is also where you'll securely upload financial documentation after you've purchased your home. During the pre-qualification process, at no cost to you, we'll pull a soft credit report. This does not impact your scores, nor is it an actual credit inquiry. It just helps us get a general picture of your credit. Once you've purchased your home, we'll generate a tri-merge credit report at that time. However, we pride ourselves with providing you a secure technology combined with personalized service. Should you wish to speak to a licensed loan consultant before pre-applying, you can also use the same taylormorrison.com home financing page where you can talk to a loan consultant specific to your market. Each day we have loan consultants standing by online to receive your inquiry, and you'll never be alone in this process. Throughout the process, from beginning to end, if you need assistance in qualification improvement or loan enhancement, our Arrow team is ready to assist. Arrow, or Able.Ready.Own, is not a credit repair process. It is what this slide says, a complimentary service to prospects and purchasers where you'll be given professional guidance and provided consultation by our Freddie Mac certified Credit Smart coach. There's personalized paths that are specific to your needs, and many benefits include credit score improvement, debt to income ratio improvement, building trade lines, interest rate pricing improvement, and mortgage insurance premium improvement. Arrow began nearly 15 years ago, and in just the last 3 years has helped over 1,200 customers with qualification improvement. On average, our customers are seeing about a 40-point increase. However, our record is 195 points. That's just amazing. So wonderful program there for sure. As we wrap up this finance part, it's really important to remember our economy, interest rates, they're cyclical. You know, what goes up one day will come down another. At Taylor Morrison, we want you to marry the home and not the loan. When you purchase a Taylor Morrison home and finance with Taylor Morrison Home Funding, we will refinance your loan without lender fees anytime after you close, whether that's months or years later. So don't think of us as gone after one time. We're here for you forever. With that, I'm going to kick it back over to Andrea Murphy, and we'll wrap up here soon. Thanks, Andrea. Thanks, Christy.
Thank you, Brendan. Okay, now we're going to go through some questions, as I mentioned, that we received in advance of the webinar. If you wouldn't mind going to the next slide for me. Thank you. Okay, I'm going to take this slide and hopefully be able to answer the questions. There are still some questions flowing through the chat. So if there's something that you are dying to know and it's not on this list or the next list really pertaining to its financing, please go ahead and put it in the chat. And we have some team members monitoring that as well as some time at the end. Okay, so our 55 plus or resort lifestyle community, so excited that you asked about this. We have lots of different options depending on the market that you're interested in. Specifically for our Esplanade communities, which are our lifestyle communities, if you navigate towards taylormorrison.com, you will see a link to any of our Esplanade communities. I would tell you that the best way to navigate this is really to reach out in your local market to our online sales managers. There may be a market that you're interested in that perhaps doesn't have a lifestyle community that suits your needs, that we can potentially show you some other options that are age targeted or 55 plus. But each of our markets is either designated in the top corner of the community page with a 55 plus banner, if that's what you're specifically looking for, or it will designate it as an Esplanade community, which is a lifestyle community for us. Moving on to choosing our design options or building custom. We look at it as personalizing your home any way that we offer it in our market. So we have, depending on the market, community, and floor plan, we have options to customize your home from the structural features that are offered, or potentially design your home through our Canvas curated packages, which have countertops, cabinets, flooring, backsplash, really design inspired features put together to make your choices a little easier. Or we have the route, depending on the market and the community, to visit one of our design studios, to meet with one of our design consultants, and really personalize everything from scratch. So it just depends on the market, the community, sometimes the floor plan that you're looking at. The online sales managers are there to answer those questions prior to you visiting one of our communities. And then our on-site community sales managers can also answer that for you, depending on the community you're looking in. We had quite a few questions regarding earnest deposits at the time of home purchase. The earnest deposit will vary based on the community that you're interested in. The online sales managers and on-site community sales managers can answer that. If we're just wondering if an earnest money deposit is required when a purchase and sale is being executed, the answer is yes. But the amount would be dependent on the market and community that you're interested in. As far as the buyer or customer having an agent, absolutely. We love our real estate agent partners and we really value them along the process. A best practice is to make sure that when you visit our community that either your agent is present with you or that you notify your community sales managers that you're working with a real estate agent. That way we can make sure that everyone that is involved in the transaction is communicated to, knows what's happening, what the next steps are, along the way. Our floor plans are all notated. We have interactive floor plans in all of our communities. Those can be given to you through a PDF brochure from our on-site team or downloaded from our website. And they're also there either digitally or sometimes paper copies with our community sales managers on site. Cash buyer incentives also vary by market, by community. And again, you'll hear the common theme that our online sales managers and community sales managers can get you more specifics on that, depending on which market and community you're interested in. Quite a few questions regarding the shortage of inventory, and obviously that varies depending on the market that we're in. So how is Taylor Morrison responding to the shortage of inventory? As a national home builder, we are working with local and nationwide home builders association to make sure that not only we're providing solutions to the shortage of inventory by ensuring that there's no additional hurdles that we have to overcome with our municipalities. That typically adds to a shortage of inventory as we look to bring communities online and provide housing in certain locations. But we're also working with them on the affordability piece, which you really heard Christy and Brendan talking about. Community fees and pet policies also vary depending on the market and community that you're in. We have all different sorts of nuances that we deal with depending on the specific location. But our online and community sales managers that are on site would have all of those documentation available to you so that if there's something specific that you're looking at and you want to ensure that you're not going to have an issue, if it is an HOA managed community, they'll be able to answer those questions as well. We do allow for investor purchases by market and by community. I would reach out to the local team there to make sure if that's something that you're interested in, that we're able to help you along that way. Home to sell contingencies. That has been a question probably for as long as we know, right? For our move up buyers or potentially our active adult buyers, typically that you're looking to sell or move from, and the situation, Morrison home funding representative, to see what your situation is exactly. Sometimes we find different avenues for selling your home, and then once you figure out what the best route for you is, then you would reach out to the online or community sales manager, and they'd be able to talk through what is allowed within that market or that specific community. Market and community specific questions, a lot of those really flowed in, and I always direct folks right back to our taylormorrison.com website. There's a lot of information that is on there, and if you have any issues with navigating, please reach out. You can go ahead and ask a question to our online sales managers. You can request an appointment, whether it's virtually or in person with our team. And that's really where you're going to find all of the information about our upcoming communities. Each market is different on when we are allowed to put communities on our website. And they have different hurdles that we have to go through before we start advertising and the amount of information that we need in order to start advertising on our website. But the moment that you see a community come online, definitely sign up to receive information. You'll be connected with our online sales managers. And by signing up to receive information on that community, typically you get all of our emails that we send out just saying, hey, the floor plans are now available, pricing is coming soon. But really, I really urge you to reach out to your Taylor Morrison home funding representative, because that really is the first step in the process and can make sure that that's the right community for you. Quality of construction and trades. I'll answer that very similarly that I answered the shortage of inventory. Taylor Morrison, amongst a lot of the larger home builders, we really try and partner with the home builders associations in providing education, making sure that we're following all of the codes as it relates to any new nuances that we have from the municipalities as they are ever changing. And really our on-site superintendents are there to ensure that we are getting the quality from our trade partners that we've promised you from the beginning. The last one is a fun one, own versus rent. Who does not love the new car smell, right? But really, myself, Christy, Brendan, we wouldn't be in this industry as long as we have been if we didn't absolutely have a passion for seeing, a community come to life, to see our signs go up, all of our customers that are so excited to really just be a part of making something. If you're in a apartment community or a community where you're in a single family dwelling property right now, when you pull in, you have that sense of belonging, that sense of, I'm home. And that's really what Taylor Morrison and why we have been nominated, America's Most Trusted Home Builder for the past 9 years, is that we have such a passion for delivering that to you. So own versus rent, that's my explanation. I'll go ahead and give it back to Christy and Brendan here, because that would be answered from a financing perspective as well.
Amen to that, Andrea. And I got to tell you, even though I've been in the mortgage side of this world for seemingly ever, one of my favorite things to do is to go walk through the new Taylor Morrison home models. It's just it is a passion. It's great stuff. So thanks for sharing that with us. On the home financing questions, everyone, look, these are going to be really personalized to each person's situation and their profile and things like that. So as we go down through these answers, they're going to be kind of general, and hopefully we're able to capture the question you actually had. If not, it comes down to going back to the let's talk and get you contacted with a loan consultant. So or post your question in the chat and we'll circle back with you as well. Down payment assistance programs, yeah, those are very specific to the local market. They're governed by the local municipality, and there's a set amount of financing funds available to those. So for those, you really have to take a look at the market you're in to see what's available. They tend to come and go just based on availability of funds as well. Moving to taxes, homeowners insurance, flood insurance, your property taxes, that's also governed by the local municipality. We have programs that will require those taxes to be escrowed and included in your payment. And sometimes there's options for you to be able to pay those outside of your mortgage payment as well. With homeowners insurance, we have our fantastic Taylor Morrison Home Insurance Services. They provide a great personalized service for all of your needs. Their website is fantastic. You can get quotes specific to the community and home site. As with property taxes, those could be in your mortgage payment or maybe not. It all depends upon the loan program and so forth. In terms of realtor rebates, yes, your realtor can contribute towards your closing costs. This is considered an interested party contribution, and all of the major lending agencies, Fannie Mae, Freddie Mac, FHA, VA, they have specific guidelines as to the maximum amount of interested party contributions that are allowed on any given transaction. So this would be something you'd definitely reach out to your loan consultant on as well. Previous bankruptcy. So, don't be afraid. Just because you might have had a bankruptcy in the past, that does not automatically disqualify you from being approved for a loan. As with other items, they're all governed by the different agencies, Fannie Mae, Freddie Mac, FHA, VA, and such. They all have different guidelines specific to the timing of the bankruptcy and the type. But don't be alarmed or don't be afraid. Let's take a look at your individual situation for sure. Low income qualifying, as with down payment assistance, very specific to local markets and the individual borrower. However, with FHA and VA, they do allow for higher qualifying debt to income ratios than traditional conventional financing. Closing costs, great website. Check the Taylor Morrison home financing page. But yes, there are closing costs associated with your loan. There are many ways that these could be covered via either seller contribution from Taylor Morrison or your realtor contribution from their rebate, or potentially a lender credit through rebate financing as well, pricing, excuse me. 1031 exchange. This is specific to investment property purchases, and typically they deal with the sale of a previous investment property and then the purchase of a new investment property. You're going to want to consult your tax advisor on these, but yes, we absolutely do 1031 exchange loans all year long. The guidelines on these really are more have more surrounding like tax consequences than actual loan qualifying. But yeah, we handle 1031 exchange loans all day long. And with that, I'll pass the torch to Christy.
Thank you. Really quick, I just want to mention, Brendan went down a series of questions, and you'll see these little links in here. The home financing page that is within Taylor Morrison's website, there is so much information and tools that you have on there. We've got a mortgage calculator feature that allows you to run your own mortgage payment. We threw some rates up there. If you're looking at rates or you're in the Mortgage News Daily looking at current average interest rates, it's a great tool. But the blog articles that we have through Taylor Morrison's blog called Second House on the Right has great articles from decorating your home to financing your home. And we just included a few of these, but you can type in a couple search words and likely you're going to find an article that'll give you some good tips and tricks. But to wrap up kind of the pre-webinar questions from registration, debt to income ratio, just to touch on this really quick to not confuse anybody, but it's essentially just a calculation of the percentage of your liabilities compared to your income. And depending on the loan program, we'll determine kind of what that max threshold is. But the income used to do this calculation, super important to know it's your gross income, not your net income or take-home pay. So that is important. The primary liabilities or debts that are considered are those minimum payments on your credit report as it relates to car payments, student loans, credit cards, etc. And then there's outside obligations like child support, alimony, and maybe other real estate that you may own that we would also have to consider. But the things such as utility bills, cell phone payments, child care, those are not considered as part of debt to income ratio, which is why we can't finance at 100% of your income. We have to leave room for you to buy groceries and take care of your babies. But typically, you really want to try to keep your debt to income ratio at 45 to 50% of your gross income for conventional financing. And then with FHA and VA, Brendan mentioned it earlier, their guidelines will sometimes allow to go up to as high as 55% on FHA, and we've seen approvals at nearly 60% on VA financing. And then options for financing without 20% down payment. I talked about mortgage insurance earlier and how it is required when you're putting less than 20% down. But conventional financing has first-time home buyer programs with as little as 3% down, standard conventional financing with 5% down. Your FHA financing, which is not required to be a first-time home buyer, is 3.5% down payment. And then you have USDA rural housing and you have VA loans that have as little as 0% down payment. Next question is, do you have to use Taylor Morrison home funding for your financing? No, you do not. You have the option to use any lender of your choice. I will mention that last year, for all Taylor Morrison buyers across the nation who needed financing, we helped 86% of those customers with their loans. There are going to be certain programs we don't offer. There may be an opportunity for you to receive a finance program that's better suited for you that we don't have. But again, you have that choice, and we absolutely encourage you to shop lenders and make sure that you're working with someone to help you with your personal financing that you're comfortable with, and hopefully that is us. The impact of your credit score on interest rate. It definitely can affect your interest rate. I will say that mainly it will affect your interest rate when looking at conventional financing. The agencies, Fannie Mae and Freddie Mac, do have what we call loan level price adjustments, and just kind of think of it like a matrix. Whether it's the higher the down payment, the lower the down payment, the lower the credit score, the higher interest rate you're going to pay. So down payment, credit score, occupancy type, those all impact interest rate, and your loan officer can absolutely explain that to you in more detail. I would say 620 to 640 would be a great starting point for conventional financing. 600 starting point. Will you have an impact on your interest rate when you're getting in that sub 650 credit score? Yes. But at the same time, we have our awesome Arrow program that can help you throughout construction or before you buy to help enhance. And I just want to remind everybody, it is complimentary. You don't have to be under contract to work with one of our Arrow consultants. We would just want you to start first with one of our loan officers. And then top tips for first-time home buyers. I linked in an article here that gives you like a top 10 tips for first-time home buyers. There's all kind of articles on renting versus owning, which was a big question. But I would just start with qualification. Where are you comfortable with your affordability? Sometimes it's not about how much can I afford, but what am I comfortable affording? And we can kind of play around with those numbers based on sales prices, down payment that you have available, helping give you some tips for how to save for down payment. So we're here to help you do that before you make that buying decision. And then how do I increase pre-approval amount for qualifying? If you've already been pre-approved at one amount, it really should be a matter of a phone call to go over that previous approval that you have. If you're looking at buying more, the prices have gone up, or you're looking at a different home or thinking about borrowing more money, we can absolutely help with that and get that pre-approval in line with what you're looking to purchase. And then lastly, loan programs. Taylor Morrison Home Funding offers, those four main loan programs: conventional, FHA, VA, and USDA. There are many loan programs out there, but honestly, over the years, it's just a small handful. There will be portfolio banks that will offer what we call non-qualified mortgages or portfolio loans that they'll just hold and service your loan for the life of the loan. But your four main ones are those. And we can deep dive into each of those if you need to contact a loan consultant, or again, we've attached a great article here to help you with that. So Andrea and Brendan, with that, I just kind of, we're right at the top of the hour. We had some individual questions in the chat. I don't know if we want to take a minute to look at those or answer those individually. I know time is precious to everybody. So we will go through these questions in this live chat. We'll publish and answer them, so the visibility is there for all of you that have joined. We will be sending out a copy of the presentation and recording. Just keep in mind that the interest rates offered today may not be available tomorrow, but the majority of this information holds true, for the ages. But again, any individual questions, you can send to communications@taylormorrison.com. Use those resources on our website for online sales managers, local loan consultants. And Andrea, is there anything else that I forgot to say?
No, you're great. And we're right on time. And it looks like we maybe have about 3 to 5 questions left to answer in the chat. But I think we've gotten most of them, and obviously we'll stay online for a few more minutes and ensure that those get answered.
Okay, great. Thank you all, everyone, for joining us. Have a wonderful day, and hopefully we talk to you soon.